Marko Papic is Chief Strategist at BCA Research. He's with us now. Marko, good to have you with us here. Thanks very much for your time. U.S. Treasuries rallied about 25 basis points after Scott Bessent's nomination as Treasury Secretary. He's seen as, something that markets can work with, and, it's not sort of all-out war in that sense with him. Yeah, over the weekend we got that tweet from President Trump on BRICS and tariffs and de-dollarization, etc. Do you think, anyone around Mr. Trump is going to really try and will be able to temper what he wants to do, will have a say, or is at the end of the day, I mean, maybe one theory is the reason why he took so much time debating who to get as Treasury Secretary was because, maybe he wanted Mr. Bessent to agree to agree with him, whatever he wanted, tariffs and otherwise. What's your sense, Marko?
Well, first of all, thanks for having me on the show again. I think when it comes to Scott Bessent, he's a Wall Street veteran. He's a legend in the financial community. And so you can see that the bond market rallied as a consequence of him becoming the Treasury Secretary. Now, investors who are familiar with emerging markets know this is the Ministry of Finance effect. You have an election, and then there's a big, question of who's going to be the Minister of Finance. This is usually what investors focus on in countries like Brazil or Mexico, not the United States. So the fact that the bond market rallied on the back of a Scott Bessent appointment, is both a testament to his legendary status, but also it is a testament to how on the knife's edge U.S. bond market really is, how stressed it is due to the potential for the Trump administration to add significant fiscal stimulus and therefore significant budget deficit. Now, what I would say is that I don't think that Scott Bessent can really, temper President Trump's policies. He can advise, which is what his role is. But ultimately, it's going to be the bond market that binds the U.S. into a much more orthodox fiscal outlays. So I would expect much less deficit over the next 12 months than many investors expect. And that initial market sell-off, the bond market sell-off, which was actually quite vicious, and it was really very profound. First time in U.S. history, the Fed cuts interest rates 75 basis points, the 10-year yield goes up by 75. That doesn't usually happen in the U.S., and I think that was a warning shot by the bond market not to test it.
Now, that's a really interesting thesis, Marko. So it seems the bond market for now is playing the role of a disciplinarian. That's interesting. So let's talk about the next piece then, because we're going to be moving towards the jobs report on Friday. And then eventually, everyone's wondering what the Fed's going to do in December. When the election verdict came out, there was a bit of a worry about whether the Fed can keep cutting, rates or not, even if it's warranted, or the whole freedom of the Fed debate came up. Are you expecting more rate cuts? And do you think the equity market in the U.S. has reasons to cheer?
Well, I would expect them to cut in December. I think it would be weird, if they didn't cut, because they cut so much before the election. So the charge of politicization would be actually if they didn't cut. In other words, I get it. You cut when President Biden's in charge, but now that it's President Trump, you don't. So I would expect a cut. Now, the question is, of course, why they're cutting. They're still cutting for, sort of precautionary reasons. They're trying to move the U.S. economy from a cash and savings driven cycle where households were spending a lot of the excess savings that was built up during the pandemic. They're trying to move it away from a cash driven cycle to a leverage driven cycle. And that's where that bond market reaction function really matters. If the long end of the curve doesn't continue to come down, and as you noted in your program, it's now below 420. So if it doesn't continue to come down, then the efforts to lower the front end are going to be empty. They're going to be vacuous. They're going to have no effect on the economy. And so it's very important that both the Fed cuts, but also that the long end responds and comes down around 4, maybe below 4, which would be ideal. It allows households to transition to buying, durable goods, homes, and also it allows corporates to refinance their debts in 2025.
All right. Hi, Marko, and good to see you, Ben. Thanks a lot for joining in. Marko, how are you positioned on global equities? The last time we chatted, you were leaning more towards a Trump winning the elections. That's happened, which has sent the US markets flying. And I think you were leaning more towards Europe and Japan in comparison to US. But US now is doing quite well. So globally, how are you positioned on the developed markets, as well as where does India come in? As you mentioned last time, that India was priced perfectly and we have underperformed of late.
Yeah, so I would say that over the next couple of months, it's going to be very difficult to try to catch a falling knife of global equities. The US is ripping higher on the expectation that President Trump will be able to deliver some of his fiscal programs. What I would say is that it's, you were mentioning earlier about the DXY, the dollar-euro exchange heading towards parity, perhaps breaking through 105. I think these are very important things to watch. And it's no time to try to buy into global equities right now at this moment. But at some point in 2025, I think probably mid-year, Q2, maybe not the first 3 months, but certainly starting with the Q2, I think you're going to see the dollar peak. And you're going to see the dollar peak because Trump is effectively going to disappoint in terms of how much growth he can bring through fiscal stimulus. And so bond yields are going to act as a governor, like a governor on an engine that's going to temper the most deficit-busting plans, allowing the dollar to actually depreciate mid-year onwards. And so the time to buy global equities is coming. It's not yet, but 2 to 3 to 6 months, there will be a pretty interesting opportunity.
And in the interim, Marko, just 10 seconds on this answer. In the interim, what's the trade? December, just 10 seconds.
US, just Magnificent Seven, dollar. Just stay with the momentum. It's
Stay
obvious.
with the US.
It's the Santa rally. Santa and Trump rally.
It's the Santa and Trump rally. Got that.
And maybe Musk as well, right? I mean, I think he's the other one who's promised to cut $2 trillion from US federal spending. And I think as someone said it, if anyone can do it, he can do it. Although, I mean, lots of debate around that as well. We'll sort of touch upon that in our next chat. Marko, great speaking with you here. And thank you very much for joining us. By the way,